HDB Financial Services IPO. Apply or avoid. Let's drill down as to what this IPO is all about. It's been a much awaited IPO because it was there in the unlisted space, so it's quite hyped, and it's actually a wholly owned subsidiary of HDFC Bank. Interesting company, incorporated in 2007. Uh, complete. It's more into the retail, deep rooted retail segment. So while we were hearing them out, so we got to know that the average retail loan book is approximately for 1.5 lakh rupees only. That's how deep they are in terms of lending to the retail investors, be the kirana store walas, be people wanting to buy a auto or a small vehicle to help कम्यूट फ्रॉम वन प्लेस टू अनदर, सब्जी मंडी जाना है, एक शहर से दूसरे शहर में कोई चीज़ पहुंचानी है, तो उसके लिए 50,000, 1 लाख, 1.5 लाख, 2 लाख का लोन चाहिए. सो दैट इज़ व्हाट टिपिकली HDB Financials does. Second interesting part is that none of the HDFC Bank customers are their customers. Having said that, the parent company is HDFC Bank, but HDB Financials is built on its own. So approximately 1.92 crores is the customer base which they have, growing at the rate of 25% over the last 2 years, spread across 1771 standalone alag se branches. This is not a part of the HDFC Bank, although it's a company owned by HDFC Bank, but they have their own standalone branches, separate employees altogether, and spread across approximately 1170 town cities. So typically into enterprise lending, asset financing, consumer finance, and approximately 73% of their loan book is into the secured segment. IPO, if you see, 12,500 crores IPO, out of which 2,500 is fresh, and 10,000 will be used for offer for sale. That will go to HDFC Bank. In this case, the price band is 700 to 740, so upper band is 740. 20 shares, one lot, that is approximately 14,800 का एक lot size आएगा. Market cap is approximately 62,000 crores, looking at the upper band of the price band. Retail quota is 31%. So here, important thing to note is that in case if you are a HDFC Bank shareholder, before on or before 19th of June 2025, that's the cutoff date, then you can also apply in the shareholder quota as well as the retail quota. The choice is yours. Listing is going to be on NSE, BSE. The IPO date is between 25th to 27th of June. The final allotment should be done by first. Listing should be tentatively on 2nd of July. So it happens through the application supported by blocked amount, which means if you apply for the IPO via your demat account, you should the linked bank account, this much amount, whatever you're applying. Say if you're applying for one lot, it should have 14,800 as a bank balance. The amount will get blocked. You will not be able to use it. If it gets deducted, it means you've got the allotment. If it doesn't get deducted, you will that amount will be freed, and you can use it for your own personal professional uses. So that is how the IPO works through the ASBA. Some more interesting facts for the financial snapshots. AUM is approximately 1.07 lakh crores, so huge. Net profit is approximately 2,000 plus crores, down by 11% YOY. The net interest income, that is how the actually banks make money, or any financial institute, so NBFC makes money. So it's approximately 7,400 crores. The net interest margin is 7.56, ROE, ROA is 14.7, 2.16 respectively. The gross NPA and the net NPA is 2.26 or the 0.99. Gross NPA is nothing but the loans which have gone, you can say, wrong. So CRAR is 19.2, tier 1 is 14.7. That's the higher, the better it is. So that's the capital adequacy ratio. Debt to equity is 5.85. So the key strengths are obviously it's the good parental company, so it's ethical, good governance, good infrastructure, and backed by almost highest number of employees in the NBFC space, almost having 50,000 plus employees in the distribution and in the collection, because if they are distributing to masses, they also need to collect, and they have that much of employee strength, so they have a good employee strength. Diversified loan book, pan India reach, they are able to upsell, cross sell, like insurances and other warranties. Strong credit underwriting, low NPA, because the parent is HDFC Bank, so the governance and the overall risk management is very tight. Risks are profit growth is slowing, high credit costs almost 2.14%, if the interest rates go down, the margins might go down, the loan book might increase. So these are some of the risks which you should be low provisioning coverage for on a YOY basis. As far as peer comparison is concerned, price to book valuations, so something like Bajaj Finance, Chola Mandalam, Shriram Finance would be the competitors or the peers if you want to compare. The ROE is 14.7 for HDB, whereas Bajaj, Cholamandalam, Shriram stand at 23, 20 and 13%. The GNPA, that's the gross NPA, non-performing assets, is 2.26 for HDB, while for Bajaj it's less than 1. For Cholamandalam it's 2%, and for Shriram Finance it is 6%. Overall, a little premium valuation as compared to its peers. As far as the verdict, we leave it up to you, but probably if you're looking for a long term, 3 years and above, it can be a good bet because of the strong parental company. So it's having a good backing. So needless to say that it's going to be a good company from a long term standpoint of view. I would say 5 to 10% is what the gray market premium is showing. So just a modest listing gain, not much to be expected here. Skip if you are actually looking for those bonuses 50%, 100%, because that's a range bound market which is going on in the current scenario. So not much of a listing gain can be expected until something big happens in the next 2, 3, 4, 5 days. And overall, it's little concerning to see the profit growth going down, and probably one can look at investing in this company post the listing if it opens at a discount, and obviously peers are already there. So that's a little bit about the retail investor verdict. What do you think? You can obviously post your comments wherever you're watching this video from. Thank you so much. Till then, namaskar.